Good morning and welcome to the IX trading room with me, Richard Perry, market analyst for INFINOX. Now, this is the second one we've done this year, and markets have been very interesting actually at the beginning of this year. We've seen some risk positive moves that have driven certainly equity markets higher. And we've seen the dollar continuing to correct lower. There was a bit of chop around last week with regards to the US labor market data, but then after the non-farm payrolls report, we've seen another leg lower in the US dollar, and that has subsequently driven market moves through Forex major pairs as well. Commodity prices, certainly precious metals, moving higher, and equity markets also have been boosted by this. So just what we're looking at the moment is that markets have remained positive overnight. There was a bit of a consolidation yesterday. We saw this candlestick on the euro dollar chart here, which was a pretty much, well, I mean, to be honest, for most of the day it was fairly flat, nothing really doing, and then a slight tick higher into the close. But then we've seen a slight move higher overnight, and that's sort of come, as you can see, on these pairs. We've seen a slight gains coming through, and that's come as treasury yields have just dropped back again. We've seen the 2-year just easing lower once more, and I've just highlighted this area here. We're basically between 4% and 4.25%. It's a big floor on the 2-year. You can see this dotted green line. I sort of highlighted this in a report I wrote yesterday. This is a massive uptrend on the 2-year yield that is basically now been broken. It just suggests that, I mean, US Treasury yields have been in this sort of process of sort of topping out for a while, and that's sort of been one of the major reasons why the US dollar has started to fall over. You can see this US dollar tracking lower and moving back towards this sort of primary uptrend here, this big uptrend that we've seen on US dollar since the middle of 2021, really. So an 18-month uptrend on this dollar index. We're now sort of tracking back towards that. And very interesting moments actually on dollar index. I'll show you this long-term chart here. We can see that the dollar index has retreated back to the breakout point of the COVID sort of volatility high of 103. The market had that huge run in the last 18 months or so, 2 years, and is now sort of unwound back towards that 103 mark. But look at this 50% fib, so 102. So 102 to 103, big levels on dollar index, and these levels are now in the process of being tested. So we've seen that sort of retreat back to that uptrend here, but you can see here the breakdown on dollar index, overhead supply now between sort of 104.50 to 106 area. And we can see that all these Forex major pairs, certainly euro dollar, continue to move higher, and we've got that move that is sort of being maintained and sustaining today. You can see that through euro dollar index, euro dollar market chart here. So what we have is this positive technical analysis. Well, and what I'm going to talk about is I'm going to do a little bit on Forex initially, a little bit on commodities, a little bit on indices, and basically talk through the MT4, MT5 platform in the process and a bit of functionality of that platform. And we'll see if there are any trades available here that are on as we speak. So in terms of how Eurodollar is looking, well, it's broken out above this 107.45 level of, 107.35 level of resistance, this reaction high here. If I get the crosshair, you see this was a reaction high back in December, and it's been breaking out in the last few days. And again, just trying to hold that closing break. It hasn't quite achieved it yet. Yesterday's closing high was 107.32, so you need a closing break of that resistance. But the importance of that, if I go further out, is that this really important high here, 107.85, was the May high from last year, and that was an important moment in the selling phase here. The next important resistance that Eurodollar will be facing. It was an old reaction low, became a reaction high, so subsequently on the way back, it's a big resistance to overcome. And if Eurodollar gets through that, then it really is, again, opening the next leg higher. And we can see the positive momentum here. RSI consistently above 50, pushing back into the 60s once more, following on from that bit of volatility that we saw last week, following on from that labour market data that was so sort of pointing towards non-farm payrolls report being strong. It wasn't that strong in the end. And subsequently, we saw euro-dollar rallying quite hard on Friday and again on Monday. A little bit of consolidation yesterday, but it's still sort of ticking higher again today as that dollar index, as that dollar has sort of just continued to creep lower. Now, the comments from Fed Chair Powell yesterday didn't do a great deal. There wasn't anything in those comments to move markets. He didn't talk about monetary policy. He didn't sort of say anything really that was market moving. So subsequently, markets sat on that and then have subsequently sort of regained a little bit of the upside initiative following on from that payrolls data and the ISM numbers on Friday, which sort of all that data, which basically pointed towards the need for, or less need for, tight monetary policy. Basically, the US economy, certainly from the payrolls data and the subsequent ISM services data, suggested that inflation pressures are reducing, suggested that there are signs that the labour market is beginning to be less tight, beginning to sort of be the early moves towards a contraction in that labour market, and subsequently that's obviously means less need for tight monetary policy going forward. And what we've got here is a chart of US interest rate futures, which shows that market still prices for the peak in US interest rates to be underneath 5%, and the first interest rate cut coming in around December still is what markets are pricing for. A lot of debate in commentary that maybe markets are over are going ahead of the Fed, moving too quickly, and the Fed is sort of trying to fight a battle against that effectively, because the Federal Reserve is wanting to be sure that inflation has peaked, wanting to be sure that this phase of big inflationary pressures in the States is now at an end, and subsequently they're still suggesting that monetary policy should remain tight for a while to come, and still not pointing towards any rate cuts in 2023. So markets are sort of running ahead of the Fed at that at the moment, but it'll be interesting to see. But certainly the dollar is corrective because of that, and subsequently euro dollar moving higher. So euro dollar, if it can hold that breakout above 107.35, is positive, but really that big resistance at 107.85 lies then straight away overhead, and that is the big test. But we can see here the series of higher lows on euro dollar, consistently forming higher lows. This latest one was on Friday, 104.80, and that importantly came around these old breakout levels as well. So this band of support you've got here on euro dollar around that 104.50 to 104.90 area is very important support now on euro dollar. And obviously, technically speaking, it is still very strong. You're trading above the moving averages. It points towards buying into weakness still. As I said, there's a lot of people out there that are saying that euro dollar is overbought. Technically speaking, I wouldn't say it is overbought on the RSI. It's not stretched. It became a little bit stretched back in December, but sort of pulled back a little bit. And it still remains positively configured on that momentum for euro dollar. So there are suggestions that euro dollar should still be seen as a chance to buy into weakness. Sterling dollar is less positive. It hasn't broken out, as you can see here. The resistance at 124.45 is still remaining intact. If I go out a couple more levels, you can see here it's positively configured to an extent. I'd say that momentum, having gone back decisively underneath 50 on the RSI, is a little bit less. It's less positive than euro dollar. I'd be less bullish on sterling dollar certainly. And I mean, just sort of looking at the fundamentals on UK economy, it's nowhere near as positive. I say positive, it's more concerning, and the Bank of England have got much more of a headache than the European Central Bank has, and subsequently, I mean, the UK growth data is much worse. The twin deficits that the UK has, inflation is a problem for both, but inflation has already started to fall over, I suppose, in both. But essentially, the Bank of England is unlikely to be able to tighten that much further, and it'd be interesting to see how this pans out. But certainly, sterling is not a strong performer because of that. It has had a move higher, but it's interesting that sterling does underperform the euro on a consistent basis. And if I sort of went to look, say, for example, at euro sterling, I haven't updated this chart recently, so let's have a look. It is still sort of looking towards breaking through the top of this this sort of medium-term range back to October. A breakout above that resistance at 88.65 on a closing basis, that would be the next sort of trigger for sterling to be underperforming euro. It certainly looks as though euro sterling is moving towards testing that resistance and potentially moving to break out higher. So sterling dollar looks as though it is moving more positively, but again, is it bullish? Well, there is upside potential, I suppose, towards a test of this reaction high 24.45. So that is something in favor of sterling at the moment, and holding on to that breakout. You've got the breakout support 21, basically 21 figure up towards 21.25. Good line of support there. If you look on the 4-hour chart, you can see the importance of that. Sort of is holding and has held in the last two sessions. That 21.10 area of support is a nice line of support actually on this chart. So you would argue that just trading above that is still remaining in a positive configuration if it can break above 22.10, which is this resistance here. If it can break above 22.10, then it really does sort of open the upside towards the next leg high. And you could even argue, I suppose, that this becomes a bull flag in that scenario. Another one here, bull flag, and you sort of then get the measurement of that reaction bull flag higher. You could measure that, and if that is the case, let's have a look. Let's actually do it. Get there. That breaks up through the resistance of the flag high. Then you take this and you measure that higher, and it certainly does suggest that the reaction high comes into play. So 22.45 to 24.45 is possible here. So that's sterling dollar in that potential breakout scenario here is a bull flag in that chart. So that's a positive move, and then ultimately that could mean that that's a potential for a move higher, and 22.10 would be the resistance. If it can break above that, then that would be a possible trade there, using that as a breakout point. So we can do a potential trade there. So that would be a pending order. That would be a buy stop, because you want to buy on a breakout, and you want to buy on a breakout above this reaction high here, which is 22.10. So the breakout buy stop. One's got 22.15. Now the key for here sterling dollar is the volume. Buying on a breakout, you want the volume to be on strong volume. The volume to be, if it is one lot trading on sterling dollar, that is $10 per pip. So you want, if you're trading a $1,000 account, that's pretty big. That's pretty big trade size. Certainly, given the fact that we're looking for a target of 24.45, so 24.45. That's 230 ticks of upside target. So if you want to do a profit, if you wanted to do a stop loss of 2-to-1 to profit ratio, that's around about 100 or so ticks, 100 or so pips of stop loss. So 100 or so pips of that would be 1.21 figure. There or thereabouts, 1.2110. So to do that, this is where the volume becomes important, because on a $1,000 account, if you're trading even 0.1 lot or one mini lot, that is still a risk per trade of, well, 105 pounds, or sorry, $105 on this trade. So that's a big portion of the account. That's too big. So I would say at the very least you'd have half a mini lot. So you're risking about $55 on that trade. That, even then, on a $1,000 account, that is still, I mean, that's still 5% of the trading account, which is quite a punchy trade, but I think that's something that is possible here. So we'll do that. We've done the trade size, done the entry price, buy stop order. That's buy on a breakout. That reaction low is 21.8. Yeah, that's a pretty good trade here, and we can see that the trade levels have come in here. Got the trade on the breakout. Your actual support is 21.10, which is basically that support. So maybe even then we could adjust that. 21.05, maybe give you a little bit of room underneath that support. Yeah, there we go. That's good. So we'll just get rid of a few. Oh, we can't do it now. Okay, fine. So there we go. So that's a potential trade on sterling here. Moving on to dollar yen, what we've seen is that dollar yen has been in decline. Now, the interesting move on dollar yen was that we saw the move sharply lower on Friday on the back of that payrolls report. Well, payrolls report is certainly was dollar negative, but dollar yen hasn't really been falling. And the reason dollar yen hasn't been falling that much is because of sort of the stabilization to an extent on treasury yields. Treasury yields sort of picked up yesterday. That's why we saw dollar yen picking up, and it's just fallen slightly this morning. So theoretically, this sort of should help dollar yen to move lower. Dollar yen and treasury yields continue to have a strong sort of positive correlation. Falling treasury yields, so dollar yen falls over. Still got this downtrend in play, although it is continuing to test the downtrend on a consistent basis in the last week or so. This resistance on dollar yen here, 133.60 to 134.75 now, this purple area here, that's the big resistance overhead. Anything back towards that still seems to be selling opportunity. Anything back towards this falling 21-day moving average, again, still seems to be selling opportunity. And it's negatively configured on the momentum, suggesting that downside continues on this chart here. Selling into strength is still the strategy in my book, on the fact that the RSI continues to falter around the sort of low to mid 40s, falls over, and then moves back towards 30. So that again is a negative configuration for dollar yen, and something that would suggest selling into strength. Now, moving on to commodities, what we've seen in commodities is that the gold price has moved higher and broken out through the resistance. Now, in these lines here are what I showed yesterday, was that there's a slight negative divergence on gold, and it's still on the 4-hour chart. It's still there with this sort of breakout. It's not perfect. It's just something that I'm looking at the moment, and it's just something I'm going to keep an eye on. I'm not entirely convinced it is still there, but it's something that is worth just sort of keeping an eye on the 4-hour chart. But gold continues to move higher, continues to break out. But gold is sort of now moving towards the next resistance band, this key resistance band overhead here that was in place around this sort of 1880 up towards $1900 area. Was old key support, which has become resistance sort of in mid 2022, is now testing that level again. So resistance being tested on gold, but look at the momentum on gold, very strong, pushing through this recovery on gold. If it can get through this resistance band, trade above $1900, I really think it's open again to the upside. But it is looking a little, I mean, just on this move here, we've got this uptrend in place. You're at the 21-day moving average as basis of support. It's accelerated away from that, so it could have a that's why I'm just a little bit mindful of that slight negative divergence on RSI. Also that on the 4-hour chart, on the RSI, on the daily chart, again we're back towards the high areas of sort of 70, not too far off that here. So again, that might start to restrict this run higher. I mean, it's been a strong run higher. 1, 2, 3, 4, 5, 6, 7, 8 sessions of the past 9. It's been trading higher on gold. So that's something again that just sort of keep an eye on. Gold is positive, but it's had a strong run higher in the last few sessions. That RSI is back towards 70. And this slight negative divergence on the 4-hour chart as well, so that might induce a little bit of a pullback, a little bit of a or maybe just even a stalling, but it might start to roll over and just unwind slightly on a near-term basis on gold. As I said, back towards this 21-day moving average, which has been a good basis of support for the recovery and also this uptrend. And especially also, I mean, if you take this as an uptrend channel, it's basically trading towards the top of the channel, and that again might start to induce a little bit of a corrective move. So just a few things to suggest not to maybe chase gold higher. Chasing gold higher may not be the best way to play it at the moment. Maybe sort of waiting for it to unwind. Also, as I said, that resistance on gold of these old lows and sort of resistance high from the middle of last year as well. So a few signs that maybe just for a wait to see that pullback. But so ultimately, gold is still in this uptrend channel, and that uptrend channel sort of points higher. So I am still bullish on gold. It's just the timing of any entry points really on gold is the concern for me at the moment. Looking at silver, silver's interesting actually, because silver is nowhere near as positive as gold. We can see that silver has broken this uptrend that it's been in since it had been in since sort of early November, late October, early November. It's been sort of consolidating, a lot of choppy sessions on silver. And you've seen this where RSI momentum is sort of just on this sort of wane really, and it sort of moved back towards 50, having broken that uptrend. It did break initially back underneath the 21-day moving average. Is that a warning sign? Well, just a few signs that silver may be struggling a little bit around these sort of resistance, sort of 2110 up, sorry 2410 up towards 2450 resistance band overhead. Just something to keep an eye on. Again, it's been sort of every time it's tested towards that 2410 area in the last few weeks, it's fallen over, hasn't managed to sort of close really decisively above that. That's resistance. So again, something to think about. If it does start to close above that, maybe that's sort of a breakout moment. But just for now, having broken that uptrend, having tested that 21-day moving average, with the RSI just sort of drifting over. These are all initial signs, just warning signs of that uptrend, of that move higher, whether it can continue, whether it is due a little bit of a near-term unwind back towards sort of 2250 down towards 22 figure area of support. And again, that is key breakout on a medium-term basis. I mean, an unwind back towards that it would be a buying opportunity, but just as I said, just at the moment, just be a little bit mindful of this sort of just drifting over on the momentum on that silver chart. I mean, if it can break out above 22.15, 24.15, 24.50, then again, that's sort of breaking out and moving decisively higher. And then you can start to think about, well, these next real highs that come in above $25.80, $26 area. But just for now, just a little bit of a choppy consolidation phase in silver that's a little bit concerning, and may induce a bit of an unwind. Another thing that is quite choppy at the moment is the oil price. There is this sort of trend lower in oil, an undoubted trend of lower highs, and it does, even when you do get these little rally phases, it just sort of falls over again. And I've got this resistance in place here on oil between sort of 83.50 up towards 86 bucks, 86.60 is resistance now. And you've got this negative RSI, negative configuration on RSI, which again points towards rallies being sold into. So oil is just struggling really. It did fall over. It picked up from 77.40 area, but again, the intraday sort of bull failures, these long upper shadows of these candlesticks in the last few sessions. Yesterday's doji, yeah, it's just again a few sort of negative near-term developments, despite the fact that the market has been drifting higher. So there's sort of a bias, I'd say, in terms of momentum, in terms of resistance overhead, would be a bias towards testing of that 75.50 area of support. And the bull failures sort of point towards that as well. Trading underneath the moving averages as well. All of these are sort of negative conditions on oil. Right, okay, so let's just have a quick look at the equity markets to finish with. It's been a move higher, a slight attempt to move higher yesterday. Zoom in a little bit. Slight attempt to move higher on S&P futures. Again, still struggling to really break out through that resistance of 39.45 area that basically is pivot area on S&P futures. If it can break through that, then the downtrend comes into play. Momentum is slightly more positive, although still a little bit tentative, still a little bit neutral. I mean, I would sort of take this at the moment, ultimately, probably as a bit of a range, really. 37.88 is the bottom, up towards sort of 4,100. So what's that? 300-400 ticks of range. I mean, that ultimately is, I suppose, a 10% range on S&P futures, but it has moved through the midpoint of this, effectively the pivot area. It's trying to move through that. So if it can get through that, then it starts to sort of look more positive. Just sort of, it is still ranging effectively, fairly neutral on that. But yeah, if it can get through 39.45, then it starts to look more positive. But it does also still need to get through that downtrend. European equities, very quickly, looking positive, breaking out, still positive actually on the DAX. It's been a really strong move. DAX has started the year in good shape, breaking out through 14,800, and I'll show you the long-term implications of that. This is old key floor, became resistance, but breaking through that, if you can get through 15,000, DAX is looking really positive actually on the rebound. FTSE 100 as well, really is testing higher. This is 5-year highs. It had a 5-year high, 77.47 hit the high and then just drifted over, but ticked higher yesterday. Again, I'll sort of move back here. You see the implications of that. These 5-year highs looking strong on FTSE, getting through that, and you're looking really positive. So again, positive momentum and configuration, support underlying here 76.35 as a breakout point. So yeah, looking positive, but needs to continue higher really. So yeah, I thank you for coming today. I wish you good luck in your trading, and I'll speak to you all next time. This is me done, and I'll speak to you next week. Thank you.